Welcome to Savills Shares, the podcast, where we cover real estate in depth. Today with us, we have Simon Smith, Regional Head of Research and Consultancy, Asia Pacific, and Nick Bradstreet, Head of Asia Pacific Retail. Welcome, gentlemen.
Welcome. Thank you.
What are some other trends you have observed in the APAC retail landscape?
What we're seeing at the moment are, I think, probably three key trends. Retail sales are slowing, particularly in China, and as a result, we're seeing really a slowdown in the expansion amongst many retailers for new stores. They're opening less or looking, they're calling that down. But instead, they're trying to optimize the core locations. So where the stores are successful and doing very well, they want to get bigger space. And so they're going to the landlords and seeking bigger space in those core locations. And you can see that across the region. You can see it in Hong Kong, for instance. Hong Kong Land have just come out with this, new project, a new refurbishment. They're going to spend $1 billion US on revitalizing the landmark. And, each of those key brands, I think there's 10, will take more space. So they're optimizing their current locations. And really the third part of this, the third theme is the focus on VICs, the very important customers. With the slowdown of tourism and Chinese, outbound Chinese coming out of China, these big brands are looking at their VIPs, their VICs, trying to build bigger space, trying to build a nicer environment for them, pampering them, and making it a little bit more exclusive.
Well, brands are also more focused and targeted post-pandemic, with some high-end brands focusing on private salons and reaching out to their VIP members. Is this likely to be a long-term trend?
I think yes. I think the answer is yes. This is they're reaching out to these very important customers. They're building the salon privés, particularly the top luxury brands, the super luxury brands. They're aiming very much to that customer. And yes, I think that's a long-term theme what we're seeing. I think other retailers will be doing the same.
I see. Now, mainland Chinese consumers have been a little bit quiet after COVID. Is this silence felt around the world?
I think yes, most definitely. So pre-COVID, roughly two thirds of China luxury sales were made up of outside China, and now we're seeing roughly about a third, maybe 30%, 20% outside China. So the majority of spend is within China, less so out. That's having an effect across Southeast Asia. Yes, we're sitting here in Singapore today. We're feeling it. Most definitely. There's not as many Chinese tourists coming through. That's affecting luxury sales. I was in Malaysia yesterday. They said the same. So, we're seeing that in Southeast Asia, most definitely. We're seeing it across the world. We're seeing it in London. We're seeing it particularly in London, but in France, in Europe, less Chinese traveling, and that's affecting the retails.
And do you expect to see changes in their spending behavior in the near future?
I think they're keeping their money in the pocket. I think, they are spending less. At home, they are, there's constraints on their spend. The economy is not as good as it was. And I don't think we see, that changing too quickly. So I think, unfortunately, I think we're going to see that trend, for a little while.
Now, China's prime shopping center vacancy and rental index dropped across 11 cities from 2019 to Q1 of 2024. What do you think are some of the factors that's behind this phenomenon?
Yeah, I think there are a multitude of drivers here. Primarily in a lot of the first tier cities, we're looking at oversupply in retail markets, particularly in cities like Beijing and Shanghai. And that's causing vacancy to rise. You tend to get, under those circumstances, a natural flight to quality, mind you. retailers will ditch the older shopping malls in favor of the new formats. But underlying everything, and Nick was talking about it earlier, is really the state of the economy. There are real concerns about unemployment, about deflation, about the economy as a whole. Housing prices, of course, have been in decline, and the result has been a decade low level of consumer confidence in China. And as Nick mentioned, people are now keeping their dollar in their pocket as much as possible. So we're going to see a period in China of probably in terms of gross domestic product, GDP growth of sub 4% over the next few years. And that's quite unusual for China. I mean, the Chinese economy has been expanding very rapidly over the last few decades. So we're entering really a new period here. And that means, I think, a more muted and a less confident consumer.
Mm. The APAC average prime retail rental index has been dropping since 2018, and rents have only slightly picked up last year. What is the outlook for retail in APAC for the rest of the year and 2025, Simon?
Yes, I mean, just to revisit the earlier part of what you said, across the region as a whole, and this is a very broad generalization, rents have fallen around 20% from 2018. Now, 2018, of course, predates COVID. And we think that what initially turned markets here was the impact of e-commerce. And that's been very well documented. And of course, it wasn't until January 2020 that the WHO declared a health emergency around COVID. So that meant rents then took another leg down. Just as we sort of began to see the light, we sort of began to hit bottom in 2022. Two things occurred. In the first half of that year, the Ukraine war really started to take off. And by March, the Federal Reserve Bank in America was beginning to raise interest rates. Since then, we've seen 11 increases. Those two factors, the supply chain disruption and travel disruption related to Ukraine, and the rising cost base of interest rates, have really stymied the recovery that we were hoping to see. And of course, we were talking a lot about revenge travel a few years ago, about V-shaped recoveries, and it just hasn't happened. It's been very muted. And I think this is the story now. The markets have hit bottom, but we are seeing a very soft recovery, something probably more of an L shape than a V shape. And I think as long as interest rates remain high, I think as long as geopolitical tensions remain high, I think it's going to be very difficult to see a sort of resurgence in travel and spending.
And when do you think the prime retail rentals will go back to pre-COVID rates, if at all?
I think at this point it's very difficult to see a time when that might be. Beyond the structural changes that have taken place, the e-commerce, travel and spending patterns are changing quite dramatically. You were talking earlier about particularly mainland travel and tourism. That doesn't seem likely to come back anytime soon. Mainlanders now are spending more at home. The younger people are traveling within China. Shoppers are visiting Hainan Island for its luxury goods. The more adventurous are visiting second-tier cities, and they are far less inclined to go overseas. Apart from the fact, of course, the dollar is very strong at the moment, and a lot of the sort of places that mainlanders might have traditionally visited suddenly look very expensive compared with pre-COVID. So there's a lot of things, I think, hampering a full return to those sort of golden years. So we may have to bide our time a little bit before we see a return. Very difficult to put an exact point of time on that, but it's going to take a while, I think.
Now, the APAC markets are projected to perform well ahead of the US. What are the factors behind this?
Very simply, growth. There are still many of Asia's economies are enjoying catch-up growth. As we develop quickly, what we used to call the Asian growth story has not gone away, and that's about youthful demographics. It's about growth of manufacturing. It's about emerging middle classes, demand for healthcare, education, urbanization, all these very important ingredients which go into that sort of that sort of magic mix that makes a successful economy. And Asia has that in spades. And I think that will help us drive through the next few years. And if you look at forecasts for growth, we are, of course, ahead of the more mature economies of the US and the Eurozone. And I think with the emergence of countries like India, of course, that's going to help as well. We might wring our hands about China a little bit, but 4% growth is still pretty good compared with the rest of the world and compared with more developed economies. And then you look to Southeast Asia as well, and the sort of the changes that are taking place there as they benefit from the China +1, for example. There's a lot in Asia that still signifies that we're going to do a lot better than some of the Western economies, I think, over the next few years.
Overall, the market in APAC is projected to see the size of its consumer market grow from 1.9 billion in 2024 to 2.5 billion in 2030, and that 9 of the world's top 20 consumer markets will be in APAC. What does that say about the APAC consumer, who is defined as someone who spends at least $12 per day?
It says that the APAC consumer is still being created in their thousands, their hundreds of thousands, and in their millions. This is about emerging middle classes. It's about the shift from agrarian economies to manufacturing-driven economies to the tertiary sector, finally into services. And this means rapidly rising incomes and changing preferences in terms of spend, where people are trading in mopeds for cars, buying fridges and air cons, and aspiring to own luxury goods as well. And that's what's driving a lot of these markets. And the other forces there are things like urbanization, which are hugely beneficial to economies. And there's still plenty of catch-up growth here for Asia. Developed economies grow much more marginally because of their nature, that they are developed. But Asia, we still have a lot of those good things ahead of us, and that will continue to drive markets, including retail.
Well, China is projected to see about 15% growth in terms of consumer size, followed by India with a 46% increase. What does that mean in real terms for their retail scene?
So growth in the population, you're talking about, well, that's clearly going to help. Both in India is substantial, and everyone talks about this growing middle class. So that's going to translate into retail sales, more purchases, and whether at all levels. I think it's going to be sort of that middle market level, all the way up to luxury. So I think that's healthy, and it's looking good for the consumer and the retailer.
The question is often more on where that spend will occur. Will it be domestic or will it be international? And I think in the case of India and China,
Yes.
We've certainly seen a much greater emphasis on domestic spend recently. And it's interesting if that's going to change or not. If you look at things like rail and air travel in China, well above pre-COVID levels. This is people choosing to travel and spend at home in preference to going overseas. India as well is a very domestically focused market. People's first choice is to travel domestically rather than jump on a plane.
It's quite interesting, isn't it? I mean, pre-COVID, the mainland Chinese were spending out of China. The luxury goods, as we said, sort of 2/3 of that was outside China. Now it's completely reverted. So it's the consumer is spending inside China. When will it return back? I don't know. Who knows? I suppose it's all about the economy. When will the economy come back, and when will that return? But it's interesting how it's pivoted.
I mean, we've talked a lot about the lack of consumer confidence in China, in some respects, but there are, and that has certainly had an impact on the rest of the region because mainland tourists have become so important. But there are highlights in the region as well. Japan, for example, a lot of Asian tourists are very currency driven, and the weaker yen, remember, is at a 30-year low currently, has really attracted millions of people to visit Japan, over the last 6 months, over the last 12 months. And that's having a significant impact.
Yes.
A lot of the luxury brands are opening flagships in Tokyo now. You're seeing visitors from China, from South Korea, from Taiwan, from Hong Kong, from here in Singapore. So the Japanese retail scene is really on fire at the moment. So that's a very positive spot still. Korea,
Yes.
a cultural powerhouse in the region, continues to attract tourists in large numbers. Bangkok is doing a lot for tourism. I think it's expanding its visa-free travel now from 57 countries to 93, if my memory serves. They are appealing to mainland Chinese, to Russians, to other Asians. We're also seeing a huge amount of new retail development in Bangkok. So 3 very large-scale mixed-use projects are attracting everyone's attention at the moment. The Dusitani redevelopment, One Bangkok, and Central Embassy. And these are 3 potential locations for luxury retail, and represent quite major, urban vertical mixed-use developments. They're going to transform the areas of the city where they're being built. So yes, it's not all doom and gloom. I think there are some hot spots out there. Let's not forget that.
The luxury market has also enjoyed the Chinese renminbi. So how will that change with this development?
We've sort of covered that in a sort of an earlier question, but I think more numbers, and as the economy grows and people get wealthier, then it's going to impact luxury. There's great aspiration for luxury goods, particularly in China, less so in India, but particularly in China. And it's going to.
I think yes.
Create more value for the brands.
I think what changes also maybe is where people want to go. Suddenly people with higher incomes and more wealth have more choice as to final destination. So they're not just going overseas to shop for goods and brands. The experience becomes more significant, I think. So you'll see a higher spend on things like hotels and accommodation. You'll see people spending more on experiences. So when mainland tourists come to Hong Kong now, they're as likely to go hiking or go to a concert or watch the fireworks as they are to go shopping for luxury fashions. So those sort of shifts take place as well within that sort of high net worth bracket. And I think, it falls to a lot of cities like Hong Kong and Singapore here to maintain their appeal, and to broaden the appeal. It used to be sufficient really to provide luxury fashion. I think now that appeal has to be so much more. I think Singapore's been very good at that. We have the Sands casinos, we've got the Gardens by the Bay, we've got the theme parks,
Formula
One, Taylor Swift.
Yes.
There's got to be more than simply fashion and brands. They're very, very important still, and they're an important driver of people's intention to go overseas and spend money. But they're not the sole driver anymore. They're not the sole motivation that they used to be. Certainly in Hong Kong, we see a lot more young people. We see a lot more people taking pictures for mainland Instagram-like websites. They'll take pictures of certain areas of Hong Kong. They don't spend as much in the shops and the restaurants. They're enjoying quite a different type of tourism. So I think we've got to stay on top of those sorts of trends.
China and India's increase are miles ahead of US with only 4% increase. How does that bear for the US retail market?
I think the retail, the US is, the more developed markets are always going to grow more slowly. The US is multiples in terms of its size of China still, and it will remain that way. I think in the shorter term, what we're already seeing because of the strong dollar is actually a lot more North American tourism. And certainly Europe can expect a wave of North American tourists this year. And I would imagine parts of Asia as well will see an uptick. But I certainly wouldn't be writing off the US as a retail market. Remember, the US economy is actually, although a lot of people don't feel it, is in pretty good shape at the moment. You know, it's fairly high levels of employment, decent levels of growth. The States and the global economy more broadly appear to have successfully skirted a recession this year. There was talk last year of a potential recession this year, but we seem to have avoided that. And again, that seems positive for retail. The fact that spending has not been as strong suggests, yes, there is recovery. Yes, there is positive growth in retail sales, but it's just going to be a lot softer than we'd anticipated.
I noted that Singapore is slightly more landlord favorable. How does that impact the retail market here?
I think that, a landlord has got, many of the landlords in Singapore have got more leverage over the retailers. You know, the prime areas are established. They're along Orchard Road or, around Marina Bay Sands. And, there's a full occupancy, full trade mix, and they've got the leverage to set the rents. So I think that really applies to those core landlords. If the core landlords, if you're in the core district, you've got the muscle, to control the tenancy.
Southeast Asian countries besides Singapore are projected to experience population and income growth over the next few years. In 2022, the GDP of ASEAN countries was US 3.6 trillion. How will this impact luxury spending?
Yeah, I've always been a big bull on Southeast Asia, actually. And finally, I'm right. It's taken a few years. The displacement of industries from China into Southeast Asia has been quite marked. That's having a transformative impact on things like supply chains and infrastructure. It's also, as we mentioned earlier, giving rise to higher incomes and higher discretionary spending. And that in turn has meant a domestic appetite for things like luxury goods. Among other important services, healthcare, education, all benefit, all boats rise. But in terms of luxury retail, there is a renewed demand for these aspirational goods. The problem that we find in a lot of these markets is simply a lack of availability. That the retailers don't always have the choices that they would like about where to locate.
Yeah, and actually taking that point, so we talk about India growing. That's great. There's growing middle class, the economy, the wealth, but there's just not enough quality shopping centers being built. Same in Vietnam. Again, a lot of retailers are looking at Vietnam. There's good demand, but you haven't got the quality of the shopping centers, the availability of the stock, and that's holding a lot of retailers back.
But we're bullish on these markets very much, and it's not just the beauty of them. Many of them is it's not just a domestic story. It's the domestic stories come through very, very strongly, but these are also very well known destinations for international tourists as well. So I think they sort of win on both sides really. So I think we see a very bright future for the Southeast Asian retail market, certainly. Nick said, unfortunately, there just is a lack of availability at the moment. We need to see the opportunity there. We need to see the quality retail malls coming into their own, and established landlords developing in those markets. And that would help enormously, I think.
But that's coming through, isn't it? We're seeing, as Simon said, Thailand, we've got several big projects coming through, great opportunities for retailers. So we want to see that more in other countries in Southeast Asia.
Well, that's all the time we have for today. Thank you, gentlemen, for joining us.
Thank you, Jack.
And thank you for joining us. You can catch all the latest episodes of Savills Share the Podcast on YouTube Music, Spotify, and Apple Podcasts. Till then, God bless. This podcast is for general information only and should not be taken as professional advice. Savills accept no responsibility or liability for any direct or indirect or any consequential loss from the use of, reference to, or the reliance on this podcast or its content.